And we have those top picks with David Burrows. We'll start with the Home Depot, and you're choosing the Home Depot in part because of this consumer theme you talked about off the top of the show.
Part of it's consumer theme, and then you want to look at where do you get a natural tailwind. One of the risks in retail is what online is doing to many of the companies. Home Depot really doesn't have a threat of that. It's unlikely you're going to go to the web to buy your 2x4s. Tough to get that sent by FedEx. So they're relatively immune to disruption from e-commerce. They have been getting very nice sales growth. Last quarter, sales were up 5.8%. But more importantly, they're getting expanding margins. So since 2010, their gross margin's gone from 7% to just over 12% as they've been executing extremely well. So business is great. At the same time, they have very friendly shareholder return of capital. So they've been buying back stock aggressively. They'll buy back probably between $5 and $7 billion worth of stock over the next year. Last year, they bought back close to 10% of the float. As one fellow this morning I heard talking said, the dividend over the last while has gone from $1.35 to $1.88, yet it's costing them less cash today to pay that dividend than it was back then because they bought back so many shares. So they're winning from a theme, which is stronger consumer. They're executing well. Stock's behaving extremely well. It's in a sector that's performing strongly, and almost all their revenue comes from Canada and the U.S.
Another top pick here is FedEx. Now, are you focusing on its U.S. business or its global business? Really,
the U.S. business is what's most interesting. But first of all, the big tailwind here is falling energy costs. So that is certainly a help. A lot of U.S. companies have been restructuring to deal with, global competitive threats. FedEx has been taking costs out of the business. They think that there's another $1.6-ish billion that they can take out of costs. We're headed into what is likely to be a pretty strong Christmas season in the U.S., and that means for the whole supply chain that there's going to be additional volumes going through, and FedEx is doing a pretty good job executing. Just want to go back to the idea you want to find things that have a tailwind from current conditions, and this is a company that is in that camp.
You also like American Tower. This is a company you've recommended before, AMT, which is now a real estate investment trust.
Right. So we often get asked about this company. REITs have been out of favor over the last 12 months. AMT has performed particularly well. What a great business model they have. This is towers. They rent out space to mobile service providers. They've got great customers. They're never going to get bad debts. There's a never-ending increase in demand for bandwidth, so there's always new equipment being put up. All of the four biggest providers are replacing gear and putting up new gear for 4G LTE technology. They have raised their dividend every quarter over the last year, 23% this year. They expect to double their cash flow in the next 5 years. There's almost no capex to maintain these things, and so with growth in cash flow, they will see growth in dividends. And the dividend isn't a big one, but people like getting a dividend increase each quarter, and they've got lots of global opportunity to continue to add additional towers to their portfolio. So it's pulled back a little with some of the REITs in the last bit. Stocks held and making a turn up. I think it's a great entry point.
Any final words for us?
I think really you want to focus on companies that are skewed toward the U.S. economy. There is a concern that global slowdown will impact the U.S., and it will impact some companies. But I think that the U.S. economy has a pretty good head of steam, and likely fourth quarter is likely to wind up being very good.
Okay, we'll wrap it up there. Always good to see you to get your perspective.
Well, thanks for having me.
All right, thank you to David Burrows. Thanks for your questions. We will see you later on in the day. Stay tuned now for Business Day PM with Catherine Murray.